We're back. Welcome back. Chuck Malamut is here. I think he's going to be mildly impressed with the show prep that I did. I want to actually, I have to just to handle responsibility, but I want to ask Chuck for permission to go to my show prep that I did for his now, we're in our 26th year of doing his show. I think he's going to say, Harry, you did some awesome show prep for the Malamut program. And I think I did. So we're going to get to Chuck in just a moment. It is my pleasure to tell you that the program you're about to listen to is very listenable. It is presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck Malamut. They do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. Chuck, I've done a lot of show prep.
Good morning, Harry.
You want a little more volume in your headset?
That would be great.
How about now? Good?
That's very good. Thank you.
Good. I'd like you to be comfortable. All right. So here's what I came up with, Chuck. And I know you've got the goods. You bring it every week. But get a load of this. Your brother Harry, did some homework. And here's what I came up with. And it's very extraordinary. NASDAQ up 8 weeks in a row. Longest winning streak since 2010. That's my first comment. The Dow Jones Industrial Average, is up 6.5% so far this year. This does not include yesterday. The NASDAQ is up 4.6% so far this year. The S&P 500 is up 6.8% so far this year. The Dow is really right at an all-time high. It's slightly fractionally down. NASDAQ is fractionally down from its all-time high. And I'll continue. S&P 500 fractionally down. All these are like 0.3, 0.4 from all-time highs. The Dow is up 183% since the low that took place on March 9th of 2009. The NASDAQ is up 313% since March 9th of 2009. It's low. The S&P 500 is up 223% from its low of March 9th, 2009. And I even did a few things about oil because you made a prediction last week that you thought with what was going on and that oil was creeping up a little bit that we would see it at the pump. And this time last week, we were at $1.89.9, and as of now, it is towards the upper 190. So almost up 10 cents since Chuck was on last week. Oil is up 31% so far this year. And I want to stop because I think I've done enough. So, Chuck, I did a little bit of show prep for the Malamut show.
Harry, good morning. Yes.
Because I know you had a summer cold. And I always have your back.
Yeah, we do. So we're fighting through that. But interestingly enough, it's hard to believe that. It's been a long. It seems like it's been a long time since we hit those lows in March of 2009. And imagine at the absolute wrong time deciding to get out. What it would have cost you. I mean, you might have felt good for a short period of time, but at the end of the day, look at what you would have given up when it's all said and done.
I was going to give Halls a Honey Lemon Halls to Chuck, but he is a 26-year trained broadcasting specialist. I'm proud to note that he has a whole bag of Halls for himself.
All right. So, Harry, putting all that, aside for a second, if you take a look at, what is happening or what has happened in August, we were all kind of sitting here waiting for a tremendous amount of volatility, and it did not. It has not happened. I mean, we've had we've had days where the market has moved triple digits, and days when the market has been very, very muted. But for the most part, during the month of August, it seems it's been very, very very quiet, and as a result, the trend has been higher in spite of everything that you talked about in the 6 o'clock hour and the 7 o'clock hour. And you'll probably talk again. You got Dr. Bob.
Yeah. So
we'll talk about it again tomorrow, and the
exactly.
next day and the day after that.
For 150 days at least. But I thought that little narrative that I opened with on your show, Chuck, was very illustrative of, despite any of that stuff, how the financial markets, I mean, look at this. This growth is nothing short, in my estimation, incredible. If you're talking years March 9th, 2009 through the present, we're talking about indices that are up 250, 300 and some percent. I mean, that's pretty extraordinary.
Yeah, and Harry, along the way, we've had a number of times where we've had sell-offs or bear markets, we'll call it, in a long-standing bull market, and the question at hand is, are we being stretched for valuations per se? Where's your price-earnings ratio? What sort of dividend yields can you receive on quality equities? And as what is, and all eyes are on the Fed. I mean,
but is it also fair though, Chuck, to say that this is illustrative of don't panic second to second? I'm going to say, because you're my exclusive, that my folks listening right now are dealing with you, and that they should believe in their plan. They should be committed to it. They shouldn't panic, because if you panicked on March 9th, 2009, you built in your losses, as opposed to if you didn't panic. And again, it depends what investment, decisions were made, but these indices are way up since then.
No, Harry, they are, and you bring a very good point. I can reflect on it as recently as yesterday, where we are in the process of bringing on a referral from an accounting firm we do a lot of business with, and spoke to the prospective client, and the accounts are held at Scottrade, and the home of the $7 transaction, and nothing wrong with that, but our discussion was very, very specific and to the point, and said, look, we're not going to sit here and short-term trade equities. Don't be at all surprised if you own a position for 5, 10, 15, 20 years, and that's how you build wealth. It's you build it very, very slowly, the old-fashioned way, because if you think for a minute, you have the aptitude and the skill sets to beat the market on a short-term basis, then you're certainly in that elite few, because even the hedge funds struggle a lot of the time.
Very good, solid answer. So, Chuck, I jumped in with what these indices were doing. That probably was part of your market update. What else did you want to share? Well,
so, Harry, if you take a look at, again, as I chat a little bit about what happened, so far in August, and it's hard to believe that we are literally 2 weekends away from the end of the summer. It just goes by so very, very quickly. But most financial markets, if you look at last week, everything that happened within the equity markets actually happened outside of the equity markets. We spent a lot of time talking about currencies and what happens with our dollar versus the yen versus the British sterling. The euro, so the dollar's come under a fair amount of pressure, as a result of the July Federal Reserve policy meeting minutes. We sat around last week waiting for those meeting minutes to come. We are now going to wait till Friday to hear Janet Yellen speak at Jackson Hole. In the meantime, some of the Federal Reserve governors have come out and are basically pounding the table and saying, "Look, we've done a lot of our work. Now it's now time." And
it legitimately is time, but it will not happen.
So we'll kind of get a little bit out of order here, which is fine. the general consensus is that there will be a Fed rate hike in 2016. And it's a matter of, is it 25, is it 50 basis points? And I mean, that's for the first time this past week I've actually heard 50. And we were pretty much under the opinion it was 25 basis points. So September is a possibility, Harry, but unlikely. Kind of on the back of what you said last week. I mean, you were pretty adamant in your statements. I should go back and listen to the tape where you were basically pounding the table and saying, "Absolutely not. This is not going to happen in September."
Politics.
But we seem to think that December is obviously a better bet.
Of course. Now, so do I.
That is all predicated. I'm not saying that the Fed is politically inclined organization, but
they are.
But
I'll say it.
But what will happen is that the Fed, what the Fed does is going to be predicated upon all the data that they receive, and they are very, very tuned into labor. What's happening within the labor market. So,
by the way, the proof that they are political, even though you can't in your position say it, and I could not respect you more for that, but I can say it in my position, and I've been studying this for over a quarter of a century. I know when they will raise, when it's before an election, and who they try to injure by it. I know who they will not raise before an election because they want to help them, and we are in one of those modes right now. I'll tell you what. I'll tell you what I'll do. If they raise the Fed interest rate in September, okay, and I'm even going to go as far as to say this is be the easy way out because it's not going to happen in September. It's too long for it to cook in and for Trump to say, look, rates are rising. They're not going to allow it, and they're not going to do it before the November 8th election. If the rate gets raised at the September statement of the Fed chair, who I have a lot of respect for, I will wear a costume in studio for a full program. You can pick it. It can be a dog. Wow. It can be whatever you want it to be. I will be in a costume for the entire program.
Well, Harry, unfortunately, I can't dedicate 4 hours and 6 minutes to come watch you in your.
Well, I'll take a YouTube of it.
In your dog costume.
Yeah, if
whatever
you want it to be a dog.
But I would rather
maybe a horse in honor of Malamut.
I think what I'd rather do is that if there is no rate hike, that I will buy you a pizza. And if there is a rate hike, that I get to pick the finest restaurant in Atlantic City, you're going to take me.
Okay, I'll go with that.
Okay.
So it's going to be I'm eating a pizza at Capri, but that's okay. All right, that's good stuff. Let's take a quick break. He is Chuck Malamut. I am Hurley in the Morning, and Chuck and I have been doing this. We're in our 26th year as of July 1st, in our 26th year doing this program together every Tuesday morning in the 8 o'clock hour. Last 10 minutes of this hour, we have the executive editor from the Autotrader.com, and he's going to be talking about buying your first car. It's going to be a roadmap for first-time car buyers coming up at 50 minutes past the hour. Then Dr. Bob is in studio for the 9 o'clock hour. This is Harry Hurley, and I'm with the Mayor, Charles Kane, owner and operator of the Auto Plaza, Egg Harbor Township. Mayor, tell your listeners who are looking for a car, why should they choose the Auto Plaza?
Harry, it's our full-service department, selection, and hassle-free financing alternatives that have set us apart for over 17 years. Over the years, we've been the recipient of many sales and service awards, as well as receiving an A-plus rating with the Better Business Bureau. It's been a real honor for us. We are now serving a second generation of sales and service customers. Stop in today. You're going to love our staff and experience what makes us different.
For all of your automobile service, parts, and sales needs, call the Auto Plaza at 609-646-2447. That's 609-646-2447. And visit us on the World Wide Web at myautoplaza.com.
The Auto Plaza at English Creek. Roll with Mr. Tire.
I'm drawing back on my experience that Mr. Malamut taught me to be a hotelier, because I didn't have the blessing to graduate from Cornell, from the hotel school, the School of Hotel Management. So I learned from the best in the business, Chuck Malamut. And when I speak about Local 54, you might hear Local 54, and these are departments that I was very blessed to become a senior hotel executive and oversee. And you know that from the moment, whether you're a hotel executive and AAA or mobile are in, and you already know it's over before they get to you. because they've called reservations. They have checked in. They've experienced the porte cochere. They've experienced whether the doorman was there doing the job, whether the bell person was doing the job, whether the room was clean, whether the public areas were clean. All of these valued Unite Here Local 54 employees that literally make or break the hotel services experience. They are Unite Here Local 54, and they're your neighbors, and they're proud. We'll be back in 60 seconds. Hey, thanks very much. Welcome back. 21 minutes past the hour. It is Chuck Malamut, our weekly program on Tuesday mornings at 8 o'clock, all about your financial matters. And for your financial planning, turn to Chuck Malamut, who is the managing director, and he leads his group, the Malamut Group, at Morgan Stanley's Northfield office. You can reach the team at 609-383-2010 for all of your financial planning needs. Chuck Malamut, time is yours.
So, Harry, I think as we finished up last week, we're continuing to see a shift in sort of a sector rotation as to what's working and what's not working. So, if you remember, we always chatted about telecommunications and utilities. They pretty much led the charge as we got through so far 2016. And last week, all unto itself, they were two of the worst performers sector-wise. Cyclical areas such as banks and semiconductors, autos and materials, they did the best. And again, it's sort of a very, very quiet week as we're getting to the end of the summer. Very hard to believe that we're virtually 2 weekends away, and all the shoobies get to go home. But
what a bang we're going to go out with, though, Chuck. All these concerts, and incidentally, they announced the final surprise add-on free concert, and that is Bell Biv DeVoe, or Defoe rather, Bell Biv Defoe, and En Vogue in concert.
I did see that. I mean, yeah. I'm curious as to what sort of attendance, what they will draw.
I think it'll be decent. It's a genre that hasn't been done, but there has been a lot of blowback that it's always been pop or country or something like that. I do agree with Marty Small when he says there are a lot of folks, in urban areas that would appreciate a different genre. This is certainly that. This is, you're talking about two groups that between them have sold tens of millions of records over the years. It is a completely, departure from what the beach concerts have been. But, Jimmy Buffett and Florida Georgia Line and all these other Blink 182. And now you add into that the Bell Biv DeVoe and the En Vogue concert. I think it will, well, first of all, it's free. And secondly, it's different. So I would say a minimum of 20,000 people.
That would be great. I mean, yeah. Harry, you think about everything that's obviously happened in town, and I listened to Mayor Guardian most recently when he was with you, and maybe we are turning in the right direction here to make as Donald Trump said, he wants to make America great again. It wouldn't it be great if we could make Atlantic City great again?
I have my own hat. A friend of mine in Camden County gave me my own hat. Yeah. Make Atlantic City great again in the same font. The only thing that will stop that, Chuck, is the ballot question of November 8th. If we beat that, whether the state takes over the city or the city continues in self-governance, we'll get through all of that stuff. If we beat the ballot question, Atlantic City is going to be on the move. Yeah,
Harry says, we don't dedicate this hour to politics, but I was obviously very, very disappointed with the governor's
coming out for the question.
Publicly stating that he will vote in favor of North Jersey casinos. And I guess the good news is it did not get a lot of fanfare. His track record is pretty abysmal when he supports particular causes. Wants to vote in a certain direction. So hopefully, his statement that he's voting in favor of it'll sort of hopefully backfire. But I will tell you, Atlantic City will remain as is.
And obviously, he's a good friend, and people would expect that I'm going to stick up for him. I don't agree with that decision. It's not best for the state, in my view. It's certainly not best for our region. But he didn't do a full-throated endorsement. He doesn't appear to be campaigning for it. He doesn't appear to be enthusiastically doing it, but he did say it, so I can't dismiss that he said it. But I think what I said is also true. He is not all in. It's not a priority.
I think he has other
What I also think
other personal things he wants to get accomplished, and
but I also think it means he's not really that committed or care if it happens or it doesn't happen.
I'm not going to use the airwaves to dispute the fact that you and I don't necessarily agree on this, and we can save that and get the boxing gloves on. And
but do you agree that it's not a full-throated endorsement?
It's early.
It is early.
It's early, so
hey, listen,
you have to.
And if it changes, I would be the first to say that you were right.
Mm-hmm.
But as of right now, it was a very almost throwaway that hasn't gotten any coverage whatsoever.
Yeah. So look, I guess the good news is that there has not been a lot of coverage, pro or con, on the subject. But I'm guessing, Harry, as we pass through Labor Day, that it will begin to become somewhat amped up.
I think we're going to see a full month of October and those 8 days into November, big media push both ways. The forces that want it, and obviously the multiple organizations now between the two groups in particular that are fighting this question to oppose it. I see a very vigorous 5-week campaign.
It would not surprise me, Harry. There has been a fair amount of money raised, I think, on both sides.
Yeah, because you can't take this for granted. You got to run through the finish line on this.
No, you got to run full throttle, absolutely.
And you know from personal experience, and your late great dad. I think a lot of people believed that in 1974 that question was going to pass. I think people were shocked when it didn't pass. Then in 76. I think people were shocked again that it did pass because they were so, sort of jaded from it failing, but when it was Atlantic City only. So you never know with these ballot questions.
Yeah, Harry, it depends, obviously, how it's written, how it's interpreted, the fact that there's a lot going on.
Yeah. I predict the interpretive statement is going to be a nightmare, to be honest.
And
you just have to know to vote no.
And a lot of voters will go in focused more on the top section of the ballot and not so much, when you get to the question. So, we'll know in a very, very short period of time the future of this great town, and hopefully it continues in the right direction.
Quick halftime break. It's Chuck Malamut on Your Financial Matters. Chuck is from Morgan Stanley. He heads the Malamut Group at their Northfield, New Jersey office. 609-383-2010 is the number to reach Chuck Malamut, Managing Director of the Malamut Group. 609-383-2010 for all of your financial planning needs. Trust me when I tell you, he's our exclusive financial advisor. You'll be very pleased when you make him yours. We're back. Chuck Malamut, the official financial advisor for the Hurley in the Morning program. Chuck, you are going to speak about Brexit and the United Kingdom, eh?
Harry, ever since the vote to leave, where we had that on the Friday, the 600-point down day, followed by the 200 point day on Monday, and everyone was sort of waving the flag and saying it's over. The markets have staged a remarkable recovery, but if it's hard to see, moving forward how the UK is going to avoid a recession. The rules that are now taking shape could take years before they're finalized. It's going to create ongoing uncertainty, for businesses, particularly financial services businesses. So the silver lining is that Brexit effects remain somewhat contained, because you remember,
in other words, so contained, it really is only affecting the United Kingdom.
Well, but remember, there was a lot of discussion that there would be other countries, I think Spain, Portugal, Italy, they would, in fact, be voting to leave as well. So it looks like right now that those discussions have remained contained, and as a result of that, the UK recession that we are predicting will probably not necessarily expand, beyond the Eurozone. And if you take a look at the way, the dollar is trading versus the British sterling, it's in that 1.3, 1.31 range. and it hasn't really moved. I mean, when the vote initially happened, the pound dropped significantly, but seems to have stabilized in that 1.30 area, which is certainly it's quite a move down from 145 in a relatively short period of time. But at the end of the day, we're thinking that if there is a recession, it's going to be rather contained. It's not going to be widespread.
You are listening to the official financial advisor. He's playing injured today, kids. He's playing injured, but he has a bag of Hall's Honey Lemon Cough Drops, which is I was his protege in the hotel business. I guess he's my protege in radio. I never thought of it like that before. But he followed my lead on the Honey Lemon Halls because they do help you get through what you couldn't do in your throat when you swallow, and it feels like razor blades and all of that. And, Chuck, I want you to know I left the studio, but I could still hear you for only 10 or 15 seconds because I lowered the temperature several degrees because in your beautiful shirt and your tie and the fact that you're not feeling well this morning, I didn't want you, if you were having a little bit of a fever, to feel that the studio wasn't comfortable.
Harry, I do not have a fever, but I'm just not feeling. I'm not 100% today. We'll leave it at that.
But you're getting it done. You're getting it done, and you're not complaining. U.S. manufacturing activity. How are we doing?
So, Harry, we seem to think at this point in time that manufacturing activity is going to continue to accelerate. Retail sales, for the most part, have been pretty good. Manufacturing inventories, have been declining. So that combination, with higher sales and lower inventories suggests that you're going to get somewhat of a modest pickup in manufacturing as we get to the third quarter. And if you remember, one of the things we talked about, the expectations of some pretty solid growth, not only in Q3 but also in Q4. Hopefully, we're going to get beyond that number, that high bar number that you set at 3%. And anybody's guess, can we in fact penetrate that number and then move higher?
I honestly, even though some people think that we just want someone to fail because of who it is, I want us to do that. I want us to do better than that because I root for our country, not against. But it has been shocking, though, Chuck, that we have not seen that number in 2 terms of a president. Not in the history of this country has that ever existed. That would be good. Do you, I'm not asking you to be held accountable to this statement. Do you feel confident that the climate appears to be in place where that may actually happen?
Harry, I think a lot of that will be predicated upon what happens in that Tuesday in November. Is the government, businesses view government as friends or foes, and it's been a long time since they've been viewed by businesses as friends.
Yeah, I know. Yeah.
Particularly if you look at if you look at any business, it's very, very challenging. If you look at the business that we're in, compliance basically takes the lead over everything, and unfortunately, at the end of the day, we spend, I think, too much time on working with these newly created rules and regulations, and less time working what's really important. And it's not us; it's the industry, and that's working with the clients. And who do you thank for that?
Well, amen. Who do you thank for it?
Yeah, I mean, you go several hundred miles south, and that's who you thank for it.
Without a doubt. Chuck, you're going to be getting a phone call from a very great listener of the program. His name is Brian. That's with a Y, Brian. And with great pleasure does he listen to your program each week. And when he needs your services or the services of your vocation, he knows where to turn.
Well, good. We're looking forward to hearing from him.
So you're going to like him a lot, and he's very interesting. And what he does professionally is very, very interesting. I want to protect his identity. So in any event, everybody would think that these numbers have been great, and look at, I did the whole rundown at the beginning of your show, Chuck, and that, oh my gosh, go, 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 go. There can't be any downside. But break down for your listeners, Chuck, the pros and the cons of a bull market?
Well, Harry, we are. It depends how you view it. We could be viewed as we make these new highs as it's sort of the late stages of a bull market, and a lot of strategists are suggesting that you do some reduction with respect to equities. But I think it's something that we constantly talk about on a day-to-day basis with our clients. So you think about here's what you need to here's why we think the market could work. As we know about, and we've chatted about, we have historical low yields, in the bank, so to speak. There is no yield now. There's been an increase in LIBOR, and we can save that for another discussion because we're running out of time here. But if yields remain low, equity valuations should have room to advance as we get into the future. Earnings, have been improving modestly. I don't know if you saw this morning, but I think Best Buy caught everyone off surprise. With their numbers. I mean, usually their next quarter is better than typically the Q2, and their revenues and their earnings, went through expectations significantly higher, and as a result, I think the stock was maybe up 15%, Harry, in pre-market trading. Earnings have been improving modestly. Forward guidance, has been fairly solid. We haven't remember how we were constantly seeing several years ago, that beatdown where the companies would come out and project lower, and literally those stocks in those industries would get punished as a result. We talk oftentimes about the political uncertainty, so and the geopolitical risk. So global policymakers have been hinting at some additional fiscal stimulus, and either that's putting money into the system or continuing to decrease rates outside the U.S. So, regardless of the outcome here in November, we think that's going to continue in favor of some additional stimulus. I know I'm not quite certain you're going to like my next comment, but
you're going to say it. I'm going to love it.
But it looks as if some of the uncertainty has been made a little bit clearer as to what's going to happen. Come November. This is not you and me talking. This is what the general consensus is. And remember, oftentimes the general consensus is wrong, and the contrarian does come to light. But it seems fairly clear that the government's going to continue to be somewhat divided. You're going to have, and that's Harry. That's not necessarily bad.
Well, we've had
for financial markets.
When Bill Clinton was president, and we had two houses, of the Republicans, we had some of the greatest, government we've had. Reagan only had a Republican Senate for 2 years. And he had a Democratic House the whole time, but he had a great relationship with Tip O'Neill, and there were what they called the boll weevil Democrats that voted with Reagan. You don't see that anymore because we're so much more partisan now. But this could be, every time – one thing about this election cycle, Chuck, every time you think it flips. And there's just this belief that it's already over. I promise everybody it's not over. But what could wind up happening is – everybody that thought they knew who the president was going to be will be wrong, and anybody that thought they knew who the Senate president would be may turn out being wrong. Split government could be very different than at first glance.
Yeah, so we're not necessarily, saying it's bad. We think it's actually going to be could very well be be good for the markets. The global banking system, as we know it, Harry, remains pretty healthy. We've had some decent balance sheets out there. We talked a little bit about Brexit and the fact that, those risks remain relatively contained with, pretty much in the UK. The growth that we've had here in the U.S. has been, fairly solid. The global economy seems to be somewhat on track outside of the UK. Oil prices have stabilized for the most part. We had that big move up in the last 10 days, and then it moved back down again just yesterday. And as we talked about, you said it earlier, the price at the pump was up.
You predicted exactly how it was going to go.
Harry,
it
wasn't too hard to figure.
But it happened.
Oil prices, have, like I said, they've stabilized. They've become less of a factor. Think about it, back in in January, how much we were like just looking at oil.
60 seconds hard break. I just want to let you know so you know.
So the Chinese economy has gotten, and the currency has those risks have diminished as well. And, the bipartisan support for corporate tax reform, very, very important.
Yeah, thank you.
Appears to be growing. It could occur hopefully in 2017. So I'll save for next week why, just the opposite, why the market may not move. But Harry, look, all eyes back again on the Fed. Yellen speaks on Friday. We got to get through the dog days of summer. Hopefully there will be no volatility. We get into September. Turn the page and see how we do for the remaining months of the year.
And Chuck, thank you for acknowledging on air your brother Harry's Press of Atlantic City, best of the press, best columnist, silver medal finish. Thank you for acknowledging it, Chuck.
You're welcome, Harry. Congratulations. Well, I
just acknowledged it for Chuck.
I mean, I heard it like a lot of times between yesterday and today. So and the fact that we went off air and discussed it, I just assumed that you knew that I knew that everybody else knew.
Yeah, I don't think I.
But congratulations, Harry.
Thank you, Chuck. The following program that you listened to was presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this program are those of Chuck. They do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. When we come back, Brian Moody, who is the executive editor for Auto Trader, autotrader.com, and he'll lay out in our closing segment this hour the roadmap for first-time car buyers, which is really, it's such an exciting time. Anybody that's listening, you know your first car. You know exactly how you got it. You know exactly what year, what make, what model. I remember mine, 1972 Chevy Chevelle, in partnership with brother Don P. Hurley, part of it done through a loan from then Atlantic National Bank. Yes, Chuck's laughing. It's true. That's going to be coming up next. And, of course, then you go get that first-time automobile from our good pal Charlie Kane at the Auto Plaza at English Creek. We'll be back. And, Brian, thank you for the referral for Chuck. We'll be back in just a few minutes. Don't go away.